Hi everyone, welcome back to Bill's podcast. Recently I came across an article from the Mint newspaper. So I thought it will be interesting if I share it in a podcast and thereby you will have some knowledge about what is explained in the article. So the article is stock market indices say little about economic growth.
What is economic growth?
The performance of a country with related to exports, imports and the products they manufacture, what they do.
So stock market is one component of it. It's like taking a blood pressure. The blood pressure tells you one facet of a person's health.
Okay.
But doesn't give you the honest picture of their overall health.
Yeah.
And blood pressure is a good example because blood pressure taken at that moment is your blood pressure for that moment. 2 minutes later you could have high blood pressure.
Okay.
Or you could have low blood pressure. Same thing is with the stock market. So the stock market has got nothing to do with how a country's economy is doing. We are sold this idea if the stock market looks nice and is going because the media pushes it, and the media is pushing it, political people push it. So it captures the public's imagination that if the stock market is doing great, everything in the country is doing great. No. Case in point is India itself, where you have certain class of society doing very well, then this class of society below them doing very badly, especially when it comes to inflation and salary and wages. And if you see that comparison, people on the top are doing much better than the people below.
K-shape recovery.
Yeah. And what happens in the stock market, people on the top will do well because most Indian companies are family-run companies. And they're all 70-80% owned by families.
Okay.
And those are all on the key top. So those guys will definitely do well. So you cannot look at that and say how the common man in India is doing. This is also true for all over Europe.
Okay.
And also true for US. Just because the US stock market is doing well, that's what Donald Trump kept on saying. No, under me, the stock market did well, stock market did well. They were suffering during the pandemic, right? Government was doing handouts, cash infusion and all that. Then the deficit is through the roof.
Okay.
See the amount they're borrowing. So, stock market and economy have nothing other than it being a metric to measure the economy. It is not the true picture of the economy.
Okay.
So, it is a false narrative to think a good stock market means that the country is doing well. Like for Japan also, for example, now the stock market has recovered and has broken the 40-year record and it's coming back high and all that. But if you look at the economy of Japan, it's doing terribly because the yen currency is very weak against the dollar. So for domestically, things are getting more expensive for them. Life is getting harder for the common Japanese. Whatever wage increase they saw was erased because of the yen becoming more cheap, the imports becoming more expensive. Whatever little they got in wage increase to help them spend more has all been wiped off. So this is what the truth is when it comes to stock market and economy.
So in this article they have mentioned about efficient market hypothesis. So what is that?
What does efficient mean?
Efficient means performing up to the standards which is set for them.
No, efficient means performing at optimum level.
Okay.
Meaning the amount of fuel you're putting in, it is giving the most, the engine is giving you the most mileage. It's called efficient. What is hypothesis?
The theory which is built on...
It's not even a theory, it's an idea. I'm giving you an idea as an hypothesis.
Okay.
I hypothesize that the sun will turn blue. It's not a theory, it's not a fact. It's an idea. It can be based on something or I can just say it.
Okay.
Okay, so remember that hypothesis is not a theory. And what is efficient hypothesis? What?
Efficient market hypothesis.
What's market?
Market, they relate to the share market.
Correct. So what efficient market hypothesis is that markets behave rationally. They're efficient. Meaning all the information which is available is all there in the market price. And it's not true.
Okay.
You know this. That's what Mr. Market is all about. That is what our famous think fast, think slow. Who was he? Daniel
Kahneman.
Correct. He shattered that idea. He proved that economics is about behavioral science. It's run by human beings. Human beings are the ones who are participating in economy. There's nobody else participating in economies. And human beings are not rational. We're irrational. We're emotional. And we tend to take decisions based not on fact, based on our feelings.
Emotional decisions.
What do we feel like it? We feel good today, then the market is good. We feel terrible today, the market is bad. So that is a reflection. So that also shows the stock market is a reflection of more of human emotion, of a nation's emotional state than its economic state. So if the market is going very well, you can say a certain portion of the population is feeling rather happy about things. And it's true in India. And now you see the market correcting. There seems to be nervousness in India. Why is there nervousness in India? The top K-shape are feeling nervous about the election cycle. They all thought, okay, we're going to continue whatever we're doing.
Market is going
Yes,
up.
but now market is saying, oh no, it doesn't look like what we thought is going to happen. Oh no. So it's getting nervous. So that's what efficient market theory breaks down.
So I hope that this video was informative and you had some knowledge about the article we have discussed in the podcast. So do read the article. I will place it in the description of this video. If you found this video informative, please share it with your friends and subscribe to this channel for more kind of videos. See you in another episode with an interesting topic. Thanks for watching the video.
Thank you.